Did you know that the average US citizen makes roughly $60,000 a year? That is across all 50 states, and that is reported by Forbes.com. So what we're going to do today, we are going to be looking at how much money you would have to put into Realty Income to replace that average salary of $60,000, including the price appreciation / depreciation and dividends reinvested, to see if it's actually worth it purchasing these individual stocks, or if we should just be holding bigger ETFs and things like the S&P 500 and the NASDAQ. So I hope you guys enjoyed this type of content. If you are interested in financial content, stocks, dividends especially, love ETFs, hit the like button and subscribe. That helps the channel out. And if not, I appreciate you guys for being here. Let's jump right into the data. We can see down here the average annual salary is $59,428, just under $60,000. And the average hourly rate is $28.34. Now, Realty Income is now yielding roughly 6%, a little bit under, I believe. So let's take a look and see how much money you'd have to have invested to recoup this salary of $60,000 every single year until you die. Roughly, let's see if you can retire off Realty Income and how much money and how many shares that would take. So this new series that I'm doing on the channel is going to cover a lot of different stocks and ETFs that pay dividends to see how much money we can actually make holding these for the long term. But I want to choose stocks that are good for retirement. I want to choose realistic ones. Maybe I'll do some unrealistic ones as well, just for the fun of it. But I want to start off strong with probably the most consistent dividend company, or one of the most consistent that we have ever seen. So Realty Income, their portfolio is beautiful. It's massive. Maybe it's gone down in value a little bit. But I think that there is a ton of potential for this thing to just keep going on. Just keep doing well. So what we're actually going to do, we can see they have 15,000 properties, a great portfolio occupancy. This is one of my buy and hold forever stocks. People have been buying and selling it. I'm holding it forever. They've got not a lot of geographic diversification, but it's enough for me. I'm okay with them being primarily in the US. There's a ton of information on their website for those that are interested. But really, this comes down to, is it a solid company? And for me, Realty Income is probably the most solid. Even when we look at their quarterly reports and diversification, they almost always come out on top. And that is including the rough period we've been in with interest rates, which are now supposedly coming down. Or at least people say that they are. And we've seen them, dropping a little bit, but nothing too crazy. And I think that Realty Income can really work on expanding with that lower cost for debt. Now, that being said, they are continuing to expand, but it's hard to expand when you're the size of this REIT. And so that might not make a lot of sense. But if you're a small REIT, let's say you're worth $500 million, you can buy 10 properties for $500 million, work to get them cash flowing, and you've all of a sudden increased your value by 100%. You're now worth double. But for Realty Income, because they're a $6-7 billion company, they have to try and find an insane number of properties that meet the standard for what they require, and be able to purchase them all to double what they're worth. And so that's why a lot of smaller REITs, I buy a lot of smaller REITs because they have higher growth potential but higher risk. But Realty Income is one that is just consistent, and I think that it's going to continue to trade as it has for a long time. And they talk about their acquisitions, asset management, all of this on their website. So if you guys are interested, really go check this out. I have so many videos on Realty Income. I'm not going to go into all the details. But what we are going to do now is check out the drip calculator, and that's going to help us get our information for the calculation that we are going to run. So the key thing with companies like Realty Income, like ADC, like NNN, all of these popular REITs, and some BDCs as well, is that you have to be in them for the long haul. That is what really ends up making you the most money. And so I don't argue with people about dividends a lot. I really do promote dividend investing, but I think people should do what they like to do and do what keeps you passionate. Because for me, if I was to only hold QQQ and SPY and the NASDAQ, I would be bored and I wouldn't have a channel because it's so boring to me. So I like to own a lot of different stocks. I like to try and work the market a little bit and have more fun. And so that's what I like to do in my retirement account as well. Now, it's definitely a smaller portion of what I put in there. And like I said, my main portions are stocks that have been proven time and time again to be high-paying dividend stocks, high-growth dividend stocks, like Realty Income. So I wanted to show you guys this. I was speaking with someone on a rather large YouTube channel. I was actually talking with the owner of the channel, and he made a video saying that dividend investing is stupid. That time and time again, you can beat it by just owning the SP 500 by owning SPY. And so when we're looking at these, when you compare O and SPY, without dividends reinvested, SPY does win. With dividends reinvested, and SPY pays a dividend, it's a much, much smaller yield. But with dividends reinvested, Realty Income doubles the performance of SPY. That's insane. Like, that is crazy. And I actually pointed this out to the owner of this YouTube channel, and he's a nice guy. I definitely have no hate towards him, but he was saying, no stocks can actually just beat the long-term effects of SPY. And I was like, there have been. There's been numerous. I just plugged in 5 that I thought of off the bat, and all of them have outperformed SPY. Now, I'm not saying that I can pick those stocks or that anyone can. SPY is the safer choice, but I think it's a little bit ridiculous to say I'm just going to buy SPY because it's performed the best, because it hasn't. But one important thing that I do want to pull from this is we'll pull the data. So the number one thing I want to look at is the average total return per year, which is 12.81%. Now, that is including dividends. And we can see the dividend makes up, 5%? Little under, compared to not reinvesting, which is just 8.5% versus basically 12.5. So 4, a little over 4. So we're going to plug this number in, this 12.81%, and work that as the dividend and the price action to see how much we can make every single year, if that makes sense. I'll explain more when we jump into the calculator, which we're going to do. But still, let me know in the comments what you guys think. Have you talked to other investors about this kind of stuff? Because for me, the math makes a lot of sense. And from my own research, that's what I found, and that's what I believe. I don't think it would necessarily stop me from investing this way if it weren't true, or unless it was significantly better to just hold SPY or QQQ. But either way, I want to know what you guys think. Let me know in the comments down below, and let's jump into the calculator. So I'm going to use the tip ranks calculator. There's a ton of little details I like to add in with this one, and we're not going to be doing drip, because the idea behind this calculation is that we'll be pulling this money out to live off of. So we have our share price, the number of shares I just threw in a random, and actually auto assigned 100 shares, which gives us an investment amount, and our holding period is going to be 1 year. Now, the expected dividend yield. So what I did was I included the price appreciation, the expected dividend yield, and the dividend growth all in one, because you can't split it up using the drip calculator, and it doesn't make any difference to split it up. I know that the annual dividend increase, the CAGR, compound annual growth rate, for Realty Income over the last 10 years is 3.87%, and that is from Seeking Alpha. But that's already included in what has been returned over the last some 25, 30 years. So we have our distribution frequency of monthly. We're not going to have an annual contribution. We're having a lump sum right at the beginning, because this is how much money you need in that beginning to survive off of. And then I'm going to say no tax rate, because I am investing in a Roth account. So maybe I should throw something in for taxes, but I have no idea what to pay in taxes, and it's different for everybody. So I'm going to say no taxes across the board. If you have a tax rate in your head that you know you pay for, I guess this would be long-term. No, dividends are short-term. Either way, you can factor that in yourself and take that out of the final amount. So we know it's pretty quick. With this beginning balance of only $6,000, you're not going to make $60,000, which is our goal. Your average or your annual dividend income is $775. So we're going to bump this up and go straight to 1,000 shares, which is $60,500, about right where we want our investment to return to us in annual dividend income. So now we're up to $7,750, which is great, but still, a long ways off. So let's bump this up. We'll go to $3,000, which is $181,500. And now we're really getting up there. And this is what they talk about with the dividend snowball and dividend compounding effect, is it's going to just keep getting better and better. And now our annual dividend income is $23,250.15 from just under $200,000 invested. And I know that that's not a lot for a lot of people. And what we've seen with these other funds that can pay out 50% in distribution rates and even higher than that with like the Yield Max, the Roundhill funds, the NEOS funds. Actually, the NEOS ones are a little bit lower. But still, that is an insane return that you are literally doing for just holding your money. And again, we don't know if Realty Income is going to continue. This is based off of their history, not what they will be able to do. So let's go to 4,000. No, let's go to 5,000 shares. This kicks up all the way up to $38,750.25, which is, again, phenomenal. You're making what people make after taxes, probably average-wise. So definitely phenomenal. I'm just going to jump straight into 10,000 shares. So 10,000 shares, I don't know if that's a goal of mine with Realty Income. I don't know if I'd ever put that much money into one fund unless I was like a multimillionaire, but still 10,000 shares gets the job done. So let's back it up. We'll back it up actually. You can see I'm doing this live. And 8,000 shares. That's all you need. 8,000 shares will net you $62,000 every single year. So you actually need even a little bit less than 8,000 shares, which totals $484,000 at your near 13% return. Now, if you wanted to cut this in half and say, well, we'll just go off of the dividend, not the share price appreciation that we have seen, then you can rough estimate that you would need just under $900,000. So still a lot, actually over $900,000, but this is phenomenal. So that's what you need. If you want to retire off of Realty Income, you need 8,000 shares at a share price of $60.05 and for a total investment amount of $484,000. And that will net you your $62,000.40 every single year so you can continue to survive. Now, one thing that I do think is important to note is that people that have this money to invest would probably require more than $60,000 in annual dividend income, especially if they had millions to invest. But still, it's a fun thought to think about, especially in regards to how soon we can retire if you're trying to retire early or just want to get out of the workforce as early as possible. Very, very interesting. So let me know what you guys think about this video and about Realty Income as a whole. I am still holding mine. I really do love it. But again, I'm pretty biased. So if you want more videos like this, click the like button. I'll make more in this series. And also comment what videos you want on for this series. I'm thinking about doing Main Street Capital, ARCC, a couple of other really popular dividend paying stocks that I love and I own already. And we can be actually comparing them as we go and seeing how much you need in each one to see what the winner is or the best investment opportunity according to the past. So again, if you guys like this, like the video. I hope to see you in the next one. Thank you for watching.